Hello traders, Jason here with SwingHigh.com. It is Thursday, November 12th, 2009, and the markets are lower right now. This morning we gapped down a little bit. Jobless claims came in line with the expectations, so no real movement on that. But we opened a little lower, gapped down basically, came back and filled that gap plus some. We were up as much as 0.5%, I think, and put in this interesting topping formation here. Found a lot of resistance at the 110.40 mark. I'm actually gonna go ahead and mark that as a resistance area for future reference. Okay, and then after that we came down, made a higher swing low, had a nice triangle formation, broke out a little bit, had a lower swing high, came back down and tested this swing low and the 110 mark, found support here at 110, but then just completely failed the 110 mark at 11.05. Right now I'm seeing a low base. We found some support down here at the 109.50 area, which if we go back a couple days, that's not too surprising. There's a couple times where that makes sense to be support there. Other than that, the market just kind of needed a breather after this dramatic sell-off on a 5-minute chart. You could call this right here a low base formation, or a bearish pennant. Let's draw that bearish pennant in real quick. Just a very rough triangle formation after a sell-off is a bearish pennant. They tend to break out to the downside. The reason being, basically sell-offs and rallies need rests. So what happens after a big sell-off is we're going to see some consolidation action where people get in or out based on what they see in the markets, and that's sort of like a resting period. And then from there, oftentimes, especially with this formation, a bearish pennant, you'll see continuation in the direction that the leg was. In this case, it was a down leg. We should see continuation to the downside. Okay. That was a long-winded story about the intraday formation we have here. So let's take a run around the markets. SPY down 0.5%. The NASDAQ down 0.18%. The diamonds down almost 0.5%, about the same as SPY. The Russells down 0.9%, and the financials down 0.8%. Take a look at the other financials. The Russell 1000 financials, the small cap banks basically, also down 0.8%. So we're seeing some real relative weakness in the financials and the Russells. A slight relative strength in the NASDAQ. Okay, the market internals tick is, well, was a little bullish. It's kind of drifting around the neutral area all day. No overly extreme ticks, except for I would say the more extreme ticks are to the downside, judging by this candle here and this candle here. Let's look at the trend real quick. Get a reading on volume. The trend did start bullish, drifted to bearish, and is pretty much neutral right now, heading into bullish territory. The VIX popping nicely, up almost 5%. Nice pullback right now on the VIX, and we'll see if that can go higher, leading the markets lower. So this morning it was difficult to do, but I was adding to short positions up in this area. Even though we broke above 110, I didn't have faith in the rally. So far that's paying off. We'll see where it goes from here. Check back this evening for your post-market analysis, and thanks for being a part of SwingHigh.com.